Good morning, everyone. I hope everybody's enjoying their long weekend. This is Chris from Solstice as well as Excel. You can find us on the websites, Twitter, Instagram, as well as Discord. You can DM me, check the video on a weekly basis. It's for free. We use this adaptive algorithm that's built by traders such as ourselves for side market, up market, as well as down market. Smash the like button. Let us know what you think. I'm going to make it short and brief. Let's go to the first slide that I have up here. Happy President's Day. Monday is an off day. Don't worry about the market. The market will be always there for us on the following day. This chart I have used, or this PowerPoint, it's from November 30th of 2024. I had mentioned the 11 sectors in the S&P 500. Keep an eye on them, especially in real estate and the financial sector in relationship to the XLK in the tech sector. The Mega 7 or the Fantastic 7 are Apple, Amazon, Google, which is Alphabet and Alphabet, ANC, Meta, which is Facebook, Microsoft, NVDA, as well as Tesla. I included in there Netflix, which is, I call them the Fantastic Eight. On different sectors, we have mid cap, small cap, large cap growth, dividend, BTV RSP, which is the value play, IEF and IE. I is the bond, VIX is the VIX, which is the fear and greed, or VXX. TBT is the interest rate bearing account, as well as keep an eye on gold and silver. The most important thing in the different commodity sectors, keep an eye on the dollar in relationship to the Aussie and Japanese. The euro dollar, I did not put it in there. I put the S&P 500, Nasdaq, Russell. You can use the micros, the bond, the 30, and as well as the 10, gold and silver. Bitcoin. I will cover Bitcoin, S&P, Nasdaq, as well as small cap and the Dow. Remember to check us out. Give us your commentary, give us a call, and let us know what we can do to help you out. Let's go to the first slide. And I put the Dow Jones Industrial Average, which is the large contract here. You can use the DJI, the Dow Jones Industrial Average, which is the ETF for the Dow. I have the 18 SMA 50, 116, 200, as well as 250 on the daily from beginning of the year till the week. We had created some kind of a form of a W or a head. This is a shoulder. We've been going side action for the last 16 days. You can see this professional gap here after the push up on January 13, 14. Then we had that gap on the 15. We pushed up. We consolidated here. We've been going back and forth. There's a lot of distribution, I think, in this area, but I want you to pay attention if there's going to be continuation. We are above the 50 simple moving average as well as the F3 from high to low, the recent high and low. My F3 is the 38.2 fib on the Dow Jones Industrial Average. Let's go next to the micro 2K, which is the Russell 2000 or the IWM. You can see in the Russell 2000 after the December look above high. This was the December, this was the January. We fell back in. I think I may have this anchored wrong. Let's take a look. Yep, I have this anchored wrong. This is from, I think the Fibonacci's are from way back. Edit the property. Let's take a look. This is from 2019 till 2022 highs. This is why I never re-anchored it back up here, but I can readjust it and put it up there if I have to, but I'm going to leave it alone at this point. We fell down, we consolidated, we fell further down, we created a shoulder, a head, and a shoulder, but we are in a downtrend. We are in an open cone. Even if I connect this candle with this candle, and I connect this candle with this one, we are in a downtrend, but a symmetrical triangle creating a diamond shape. Eventually, if we snap above the 50 SMA and the 18 simple moving average, which is the green and red, and continue higher, I'm looking to break out of this area. If there's going to be continuation in the 200 SMA, which is in white, should hold us together on that large consolidation in this area going across to here. If we fall through, there's not going to be continuation to the downside. If we break out, there's going to be continuation to the upside and taking out those candles here. That's on the small cap. Let's take a look at the NASDAQ NDX. You can use the QQQ. You can see in the NASDAQ 100, Since the December range in this area, we zigzagged back and forth. We fell down. We almost double bottomed. It created some form of a W. And on Wednesday, Thursday, Friday, we rallied from the 50 simple moving average and the 18. We cleared it. We came up into this area. You can see there's a tiny little gap here between the prior day, Wednesday and Thursday. We continued higher, and on Friday, we looked above and created a new high. From this week's range, from this low to here, if I measure it, you're going to see the percentage that we made in the NASDAQ on the close. It was a 3.19%. Let's go now to the S&P 500, the SPX. And what I want to show you in the SPX, we have been range bound. I'm going to show you that July high, that top one, top two, top three, retest, breakout. We fell down in January. Let's just move to the right side. You can see after falling down, we have this professional gap up here. We created a couple of gaps, which we already filled in. Those down moves here, we filled them, but we held on Thursday, the 50 simple moving average in that short-term uptrend channel, and we broke out. But on Friday, we had just a flat day from that push up. On Thursday, if I measure the whole week range from the low to this high or the close of it, we created a, whoops, where is it? Why is it doing this? Hold on, click to here. We created a 1.86% move in the S&P 500. Let's now take a look at Bitcoin, and what I want to use is the micro BT Bitcoin, because the other one has a lot of Fibonacci's on it. But what I wanted to show, since the election in November 16, we had this professional gap. We rallied up, we went side, we kept looking up to the 100%, which is around 108, 109K, fall back down to the 90K, rally back up, fall back down, rally back up. But in the last 5 sessions here, after the push down, we create, if you consider this a bottom and a bottom, this is a top and this is a top. If you consider, if we snap this area here from January to where we are, we got a shoulder, a head, and a shoulder, some kind of formation, or we got an inverted bottom, and side action in this area of consolidation. If I cannot clear 104,000 in order to continue up, and we fall back down in the range and we lose this bottom at the 93,000 area, I think the door will open up for this gap down here in Bitcoin, where it's going to find opportunity in the 116 SMA, because this was the big push. This was the consolidation, the rally, retest, bounce, retest, bounce. We retested this area here once. Here we tested the upper part of the breakout, fell down, rallied, but we've been range bound. We are in compression. We are consolidating right here. There is compression in Bitcoin. If the sentiment gonna stay under pressure on the daily, we have the 50 SMA and the 18 and F5 and F3. You can vice versa. That's F6, which is a 61.8 from high to low. In case we fall, I'm paying attention to the 23% in this symmetrical triangle. If it's going to find support for a bounce up because it's compressing, eventually you're going to get a break up or breakdown. It depends on the momentum and the speed of that move when we come out of it. So if I'm going to measure the measured move on Bitcoin, so what I want to do, go to intraday. I'm going to go do 30 days to show everybody. We're going to use 6-hour charts because it's easier. On 24-hour, you see 4 candles. It's going to show you the overnight. The gray area is the overnight. The trading hours in the US are in black, marked in Bitcoin. You can see that this consolidation, this is Friday, Thursday, Wednesday, Tuesday, Monday. This was the prior week's range, because if I take the high and low here, this is going to give me a longer measured move. But what I want to do is take the weekly range, which is the high and low, show you this. We are in a sharp basically compression in this area where either one I take for the week. And I'm going to extend it to the left to show you where those consolidations are. Edit the property. You can see it's showing 2. What I'm going to do is go to 114, and I'm going to use it as far as going back to 1 and push OK. You can see that this extension where the consolidation was when we were looking up, fell in it, looking up, fell back to the bottom end, rallied up, consolidated, fell through. But this compression here, 0 to 100, is very, very tight because you can get the extension to the 200%. You can get the extension down to the 0%, which matches that 89 you can see at minus 100. Usually between minus 80, 100, usually find an opportunity to buy, and vice versa on the top. If the momentum is continuation strong, that means you get 2 standard deviation and you'll get the upper part, and vice versa to the bottom. So I'm just showing that Bitcoin is in compression, trying to make a decision. It cannot get out of its own way. It's been almost 10 days, 15 days in range on Bitcoin. Let's do the micro NQ, which is the NASDAQ, or I'll do the QQQ for everyone so that way I don't use the measured move on the NASDAQ 100. What I want to show you is basically how to measure this and how to use it in the overall market. We're going to remove this fibs because these were from prior measured moves. We can see in this consolidation in the last fight, we popped out of that downtrend channel and the uptrend channel is holding. Even if I connect this dot to here, we are in an uptrend. We can get those pivot point or signal alerts, I call them. You can see there's this uptrend here and there's another one up here. As long as I don't lose it, I'm going to dot it, edit the property. I'm going to make this a little bit more on the dotted side. You can see the smaller range, the wider ranges here, edit the property. I'm going to make it a little bit bigger. So there's 3 different levels, and after this breakout you can see the major 2 trends. Eventually we broke out of this double top. This area here tested, we created around the bottom, ran up. So let's go get the measured move as well, and these measured moves are for extensions to the upside as well as to the downside. You can see that short week here, we're going to extend it to the left, edit the property, and what I want to do, extend it back for that 30-day range. We're going to go 1. We'll use it till the first of the month. We can do this, okay? So everyone can see that this consolidation at the 50% is going to act as support because you tested this area, tested this area, tested this area. Eventually, we looked under and broke out. Coming back to this area in the 18 simple moving average in the backside of this channel should act as support, or the second range would be the 50 simple moving average on the NASDAQ 100 or the QQQ, which is the ETF in this uptrend channel. If the momentum is to the upside, what you're going to see is the extension going up higher than we were to the upside, and the bottom side is the back end on the chart. So we're going to trade what we see, not what we think. And this is very important in trading. And you can take a look at the SPY to show SPY is in relationship to the NASDAQ. This was the prior week's measured move. You can actually activate it. I'll show you how to do this so you can get the shorter distance on the activation of this measured move. And this is the high, and you extend it to the left, or vice versa. You can see the low and high. The machine grabbed the top and high for the week and measured that area for you. This was the overnight action. If I do take it off, it's not going to show it. It's going to show you the trading hours between the highs and lows of each day. And after looking down, retesting the 50 SMA on that 4-hour, rallied up, continued. We pushed up on Friday. We had an inside day on the S&P 500. You can see in the S&P 500 the sectors which are the energy, consumer discretionary, financial, utilities, material, consumer staples, info technology, real estate, industrial, as well as healthcare and telecommunication, while the mega 8 are Apple, Amazon, once again, Alphabet, A&B, Facebook, Microsoft, not including Netflix, and NVDA, and Tesla, but I always include Netflix in it, part of the Mega 8. So I hope this video is helpful and it'll teach you how to trade momentum, supply and demand, and retracement. And you can see that this move after this linear regression downtrend channel, we're going to remove it. And we broke out of this downtrend channel. You can do another one up here, but you have to pay attention if there's going to be continuation on the S&P or not. If I zoom it in, here's your area of a W formation. You did that downtrend and we broke up and we're sitting right just below the 610.78. If there's going to be continuation or not on the S&P 500. Take care. Happy President's Day. Enjoy your week. Over.